All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, so Bitcoin saw a small pump today on some good CPI data, but then we just dumped, seeing a big bearish engulfing candle after the news, seeing a bit of a trap come in here, and we finally came down and took those 85.1K lows, and we're coming down close to the real box of support that I've been looking at this past week. Overall, saying that this bearish trend is going to continue to the downside. So, what I want to talk about, what happened today in today's price action, if we zoom in onto the hourly chart here, yesterday when we were during the stream yesterday and during the really just yesterday we came down to the lows and we were right in this area as we were streaming, and we were looking at coming down to take out our 85.1K lows, the lows from Monday. And we had actually saw a front run after the stream ended. We didn't actually come down and take those lows, and we were grinding to the upside in this ascending channel. Let me go ahead and hide some of this stuff on the chart, clean this chart up real quickly here. And I did post about this in the Telegram this morning. But if we go on to the 15-minute chart, we were in this really nice ascending channel here, just rising to the upside with relatively low volume on the charts, though. You can see this ascending channel. We broke it to the upside, and we did reject from our 786 Fibonacci. So if we pull a Fibonacci from the highs at 90, what was that, 90,336, down to the lows that we made on Wednesday, December 17th, and we look at that 786 Fibonacci, we came up, we did reject from that general area, the 786 Fibonacci here. And then after rejecting from that 786 Fibonacci, we came to back test the channel. After you break out of a channel, when you come in for the back test, if you hold the back test, then most of the time you will come up and make new highs. And I did say in the Telegram, guys, if we re-enter this channel, sure, there's a chance that the midline and the VWAP holds as support, because intraday we were acting bullish. But if we lose the VWAP, I suspect we're going to make new lows on the chart and finally come down and take out 85.1K. Well, we did come back down through the channel, and we busted straight through the channel, busting down, coming down to take out those 85.1K lows. And you can see here, we have now since then reclaimed those lows, but this was not a clean swing failure pattern, guys. We were looking for a swing failure pattern of 85.1 in order to get a real nice trigger for a long trade here. We are still above it, but I think that we are going to continue down to take out that liquidity, those very key lows that are resting around $83,800. This higher low here from December 1st. And I do think we have our macro 786 Fibonacci down there as support as well, around 83,600-ish, let's just say. So 83,800 to 83,600 is the level of support that I'm looking at now. I do think we are going to continue down to that level. And overall, since our rejection of 94.6, we have just been continuing the bearish market structure, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We did see a swing failure pattern of some local highs here, but after that, we saw a big dump, and then we made a lower high today, followed by a lower low. So I would say overall, the market structure is still remaining bearish. We were looking at, after rejecting on 3 taps of this bearish backtest of our Fibonacci channel, I have been saying this entire range that has been developing, guys. I've been telling you that this looks like a corrective range of a bearish backtest of a major trend structure before ultimately breaking down to take out our 80.5K lows, potentially coming down to 78 to 77K. And I still do agree that is the highest probability on the charts as of now. I think we are going to continue pushing down here. Now, will we see bounces along the way? Yes, we will. We could see a bounce from 83,500, 83,600, excuse me. Swing failure pattern of this liquidity into a 786. I expect some sort of bounce from there. But overall, I will be expecting a bounce to create a lower high before making another lower low here. So a lower high in this general area. So let's talk about where. So for my next long trade is going to be the swing failure pattern of 83.8K. If it triggers, guys, I'm not just going to arbitrarily set a limit order at 83,600, hoping we get the swing failure pattern. what I want to see is as we're coming down there, it would be nice to see some bull divs on the chart. So as we're coming down, making lower lows, lower highs, lower lows, and we create those bull divs on the chart. You can see already we are starting to create some bull divs here on the 1 hour chart. Also, NAMI showing some local bull divs and showing some regional bull divs here. But the money flow is coming out now on Market Cypher B pretty aggressively here on the 1 hour. I expect that it is going to continue to come out until we actually hit our support level. But if we continue to make lower lows and lower highs on the chart until we come down to there, we see bull divs on the chart, that is going to be confirmation for me to enter long if and only if we see the confirmed swing failure pattern. So a dip below the liquidity level into your 786 of support, and then a reclaim of $83,800. Once we reclaim that low, we can look to enter long here, putting our stop loss below wherever that wick into the 786 is going to be, and I would be targeting some lower highs on the chart. So let's go ahead and go into those lower highs on the chart to expect potential take profit areas and also potential short opportunities. Let's pull our volume profile. First, let me zoom out onto the 2 hour chart. We're going to pull our volume profile of this entire corrective range. We're going to look at this range that I've been saying looks like a corrective move to the upside from 80.5K before ultimately rejecting from the fib channel and dumping down to make new lows. I have had this as the highest probability Elliott wave count on my chart. I've been letting you guys know that I'm more bearish, looking overall to come down potentially to 78K and even lower. Really, our overall target of the bearish impulse is to take out our 74.5K lows. But if we pull up this volume profile, there's a few key levels here that we can look at. So the daily market close was 6 minutes ago. And we did just confirm a brand new naked daily point of control. So let me go ahead and turn on our naked daily points of controls. And you can see we have a naked daily point of control. Let me zoom into the hourly chart that is coming in pretty much at the value area low of our range. That is also where our VWAP closed 6 minutes ago and snapped to current price action. So we have our VWAP close there, we have our value area low there, and we have a naked daily point of control there. This is going to be the local resistance above us that we need to pay attention to, because anytime you break a value area low and you start to close candles below it, specifically daily candles for this bigger range that we've been in for what is that, a month or so. Let's do this. Let's pull this and let's see. We have been in this range for about 27 days, 28 days, about a month now. We've been in this range and this corrective range here. So this is a warning sign today that we closed a daily candle below the value area low of the range. If we go on to lower time frames, you'll get a better volume profile of that. So let's go back to the 1 hour chart. You can see that is your value area low coming in right around, what is that? 86,600, let's say 86,634. And your naked daily point of control, your new confirmed naked daily point of control is going to be at $86,500 on the Coinbase chart. So I'm looking at, now that we've closed our daily candle below the value area low, if we see a bounce from where we're at right now, because we are now above our 85.1K lows from Monday. So in some ways, it is a local bullish sign that we were able to reclaim these lows. But not so fast for me. Not so fast, not yet. I am looking for this overall downtrend on the hourly chart to continue until we get to our 83.6 to 83.8K support level. If we come up first, right now from where we're at, make a 3-wave corrective move up into that naked daily point of control, I'll be looking for shorts upon that naked daily point of control to take down to 83.6K. If we come down to the 83.6K level first, like if we dump straight now, we dump down, we get the confirmed swing failure pattern, I will look for the long from this area, but my TP1 on the chart will be the value area low and naked daily point of control. That is still a 6 to 7 risk, pretty much a 7 to 1 risk reward ratio for a TP1 on the trade. I will leave some open just in case we are able to break back up into the volume profile. We can see a bigger move to the upside. And let's pull our Fibonacci from today's highs to the lows that we made today. let's put on our 382 Fibonacci, which often rejects you in a strong trend. And you can see that 382 Fibonacci is going to be coming in right around our resistance area, around $83,000 or $86,500. If we drop to $83,600 first, then we can look at pulling a bigger Fibonacci. We can even pull a Fibonacci from our last POC rejection, which was on Wednesday, down to the lows. And this is a theoretical fib right now because we haven't come down to those lows yet. But let's just say we come down and hit that 786. Then we can pull that Fibonacci and we can look between the golden pocket and the 786. Let's go ahead and throw on the 786 as well. Yeah, I mean, I do like the golden pocket, and let me explain why. So if you look at this golden pocket and we zoom in on this week's price action from Monday of this week to today, this is the price action for this week, this little range that's forming here. You can see we have a big imbalance candle within today's price action, this big dump to the downside right here. We have created a fair value gap, an imbalance in the market. And if we do break back inside of our volume profile, if we can reclaim the value area low, then it's highly probable we get sucked up through that fair value gap into your golden pocket. Now, that would be if we came down to 83.8 first. If we don't come down to 83.8 first and we just take it from today's lows, then that golden pocket is still going to be at a good area. It's just going to be above the highs of that imbalance candle. And oftentimes you will come up to take out and fill that imbalance before continuing the overall trend. We can also pull a volume profile just looking at this range that is developed for the week. And you can see the value area high of that range is coming in very close to our golden pocket. And if we pull that value, that Fibonacci down to $83,500, you can see we would have some very nice alignment with your larger golden pocket in confluence with the value area high of the range. So if we come down right away, get the confirmed swing failure pattern, I will look for the long trade from $83,800 upon the reclaim of that level. Stop will go below the wick low. Let me get rid of this one here. And TP1 will be $86,500 naked daily point of control and value area low. If we can get above that, my TP2 would be the value area high in confluence with the golden pocket, about $87,750 to about $88,000. And those would be the two TP levels where I would be potentially expecting, if we do this, maybe see a small rejection, get back inside, flip it to support, come up to this golden pocket. I will be looking for shorts from this area to potentially break down to take out your 80.5K lows and potentially even coming down to our macro support down at $78,300 to $77,300. But Bitcoin is continuing the overall bearish trend. I am looking to add to shorts on relief bounces, and I am looking to still scalp long on these opportunities. Even though we're in a larger downtrend, expecting bearish momentum to continue, we can still look to scalp long these areas of support. And so if we come down to 83,500 and see confirmed price action, I will look for the long. You can see here on the 1 hour chart, we are developing some nice bull divs as we're coming down to the support. Now, the thing with bull divs, guys, is sure, we're seeing bull divs right now, but we're not at a support level. So you want to wait till you get to a support level and then see if the bull divs are there. And that's your confirmation to enter the long. You could say, hey, I'm going to long right now because bull divs are already printing on the chart. Well, you weren't really at a support level. So be patient, wait for it to come down to that support level, plan the trade ahead of time. And it's highly likely that we are going to come down to support anyways. So you can see here, lower lows on the price action, higher lows on the momentum waves. Your money flow is curving to the upside on the hourly, crossing into the green. Yes, it is draining locally right now. But overall, we do see confirmation. If we keep developing bull divs as we're coming down to this area, we have some nice confirmation to look for a long from $83,800. Earlier today in the Telegram, I did post while everyone was getting super bullish on the CPI print, on the bullish news that we saw today. Everyone was getting really bullish. And I warned you guys in the Telegram right as we were up in this area here, guys, we are seeing not bearish absorption, bearish CVD divergences. It's not absorption because our open interest was kind of flat, but we were seeing bearish CVD divergences, making it more likely that we were going to dump back down and take out the 85.1K lows. I talked about that this morning in the Telegram, warning you guys that this was probable. Let's go to our order flow charts. If we look at our order flow charts, this is the 15-minute chart. You can see this was Wednesday's highs in here, December 17th. To today's highs, we had lower highs on the price action. If we come to our CVD, you can see we had higher highs on the CVD. So this is a bearish CVD divergence. Now, your open interest, is lower. It's kind of flat in this area. It's a kind of a wonky. And to see true bearish absorption, you want to see a steady rise in open interest because you need new positions opening to be absorbed to actually have absorption. So we weren't seeing absorption per se, but we were seeing bearish CVD divergences in a bearish trend, which was making it more likely that we were going to dump down and take out the lows that we had created yesterday and even come down to take out our 85.1K lows. We have seen that bearish momentum play out. That bearish CVD divergence has played out now. The target for that divergence was to take out the lows of yesterday, but really the lows of 85.1. We have now played out that bearish CVD divergence, and because of that, we're starting to get a small push up to the upside. But once again, this small push to the upside we're seeing, I'm looking at it as no more than a corrective move. If we look at our open interest today on the push up that we were seeing, primarily towards the top, you can see right up here, once again, retail getting trapped into resistance, coming up into that 786 Fibonacci. If we look at our open interest, and this is aggregated open interest, so it's taking into account all the major exchanges, or most of the major exchanges, you can see brand new long positions coming in right at the top of our pump today. Once again, giving fuel for the market makers to trap retail at the top and use those late longers as fuel to push the price down. So once again, people longing late, getting trapped at the top, and then that gives us our fuel to push to the downside. And what happened right afterwards, guys, we formed a little bit of an intraday range around New York open, around, a couple hours within New York opening. But then you can see those late longers got flushed out of the market. The open interest dropping, and forced close of a long position is a sell. So your CVD is dropping here rapidly and quite a bit, because those late longers that longed the very top right in this area are now trapped and forced to close out their long positions, creating a sell. And we know that it wasn't fresh shorts coming in because your open interest is dropping. That means those positions are closing, not new shorts opening. So once again, the trap that always plays out for retail continues to work. We see retail getting trapped, and that caused a bit of a long squeeze to the downside to start this dump to the downside that we saw earlier today. Now, then we saw some fresh shorts coming in on this last move down. You can see right in this area. Let me go ahead and mark these out with vertical lines real quick. Right here, we got open interest starting to increase here. And then if we mark out where our open interest kind of stops pumping up right here. So you can see that with this area, we have price action going down in this area. It is shorts that are coming into the market, and those are brand new short positions. So not only did retail long the top up here and get trapped and get into a long squeeze to the downside, get wrecked on that late long, but now we have some shorts coming in near the bottom of our move, fresh short positions. You can see open interest is increasing, so those are new short positions. And now if we look at our open interest, it is starting to dump here because this little bit of a rise that we're seeing is causing those late shorters to get stopped out or close out their trades. So once again, retail preying, market makers preying on retail. Overall, I do think we are going to continue the dump to the downside here until we can get back above $86,600, which is the value area low of our range. I do think it's a higher probability that we do continue down locally to hit $83,600, where our 786 Fibonacci is in confluence with a key liquidity grab. Now, another reason we saw a little bit of a bounce from this bottom that we saw, our current bottom for the day at $84,400. If we go into our liquidation heat map, you can see here, this is the last week of price action, and this is the aggregated exchanges, the liquidity on most of the major exchanges. You can see that we came down and we finally took out that liquidity from Monday's lows, from the 85.1K lows. You can see these lows here is where that liquidity started. So a lot of people on Monday longed 85.1 or 85.2, let's say it was closer to 85.2, and they put their stop losses below that low, as you should if your trade has been invalidated. And with the dump that we got today, we finally came down, we stopped out that liquidity, and we're seeing a little bit of a dead cat bounce because we stopped out that liquidity, giving us a little bit of fuel to push to the upside. But really, to me, this is nothing more than just a little bit of a liquidity grab. And very locally, while we're here on the charts, let me just zoom into the 5-minute chart. We're forming kind of a triangle right now. A triangle, guys, is a continuation consolidation pattern. So our trend has been down, and a continuation pattern of the trend would be more downside. If we look at our symmetrical triangle, we kind of have this symmetrical triangle that's forming in here. We often do know that the market makers will trap retail. So a lot of people are saying, oh, this could be a bull flag. This could be some sort of, 1, 2, 3, 4, 5. And it could be. This could still be a 5-wave impulse to the upside very locally. 1, 2, 3. You get your triangle in a 4, which is common. Triangles are not allowed in 2 waves, but they are allowed in 4 waves. And then we get one more push up in a 5, probably to backtest $86,500, where our new naked daily point of control is. But watch for the fake out, taking out some local liquidity that's above us, and then a dump to continue. If we do get the break up from this triangle, we'll probably get that break during this video. So I'm going to cover, we'll come back to Bitcoin, see if that happens. We do have some local bull divs on the chart. This is the 5-minute chart. You can see the 2 lows here, lower lows, higher lows here. We also see NAMI confirmed those bull divs. And we are now printing within this triangle some hidden bull divs, meaning this triangle might break to the upside just to grab some liquidity before rolling over. We'll see how this plays out during the stream. Overall, though, guys, the higher probability for me is that we are going to come down to take the liquidity at $83,800. Even if we come up to 86,500 first, I will be looking at this as a short zone, an opportunity for a short. Let me make this purple. This should be purple. Okay. That is honestly about it for Bitcoin, though, guys. Overall, the larger bias. Actually, there's one more thing I want to show you on Bitcoin. So first, let me zoom out to the 8-hour chart. We're going to go on to our Bybit USD chart, and we're going to talk about this bigger pitchfork. Let me zoom out to the daily. This pitchfork has been very, very key. You can see in 2024, the pitchfork band kind of called the all-time highs. And guess what, guys? I talk about this all the time in the channel, on our YouTube channel, on this YouTube channel. In these larger pitchforks, we have the upper trend line of the pitchfork, the bottom trend line of the pitchfork, the midline, which is this red line here, and then we have what I call, I kind of made this term up, the lower band of the pitchfork and the upper band of the pitchfork. And within these larger pitchforks, these larger macro pitchforks, we often form ranges in and around these pitchfork bands because the dark green line is the 618, the light green line is the 0.5 or the equilibrium. And oftentimes within these larger pitchfork bands, you form ranges in and around the bands, and then an even bigger range in and around the pitchfork band. Well, I said it was highly likely about a month ago when we came down and hit the bottom of this pitchfork band that, guys, it's likely that we do form a bounce because we're looking at a 1, 2, 1, 2, 3, 4, and we were looking at forming some ranges in here over the next month. Well, a month has passed by, and sure enough, we have formed a range in and around our pitchfork band that could continue, by the way. I talked about this yesterday in the stream. This range could even continue for another week or so. But because we did reject, let me go to our Coinbase chart, because we did reject the bearish backtest of our Fibonacci channel, our macro Fibonacci channel, this pink line right here, this bearish backtest and rejection, For me, it's a higher likelihood that we come down to make new lows below 80.5K. And even potentially over the next couple of months, come down to 70K, where our macro golden pocket is. But going back to the Bybit pitchfork, the macro cycle, this is a multi-cycle pitchfork pulled from the COVID 2020 lows up to your 65K bull market highs in 2021, down to your 2022 bear market lows around 15.5K. And you can see this pitchfork for all of 2025 has given us superb swing trades. When we came up to the top of the pitchfork, swing short opportunity, we got a multi-$1,000 dump to the downside. We came up for a second test of that pitchfork, rejected. We got a 40% drop to the downside. We came to the lower band, the lower part of the upper band of the pitchfork. Strong bounce from that support level, came up, and this is what was key, guys. And as this range was forming, go back and watch my channel if you don't believe me. I kept saying on the chart, guys, this looks like a distribution range based off Market Cipher B and NAMI, creating bear divs as this range was forming. We were creating higher highs in the price action. We were creating confirmed bear divs on the chart, and money flow was draining out of the asset as this range was forming, making it far more likely to be a distribution range that breaks to the downside. And at the top of a pitchfork as well, which is macro resistance, you often get those three taps: tap one, tap two, tap three, rejection. Just like we saw on lower time frames right now over the past month with Bitcoin: tap one, tap two, tap three, rejection. And we are seeing that rejection. We saw that rejection from the top of the pitchfork. We're dumping down. We did dump down to 80.5K, where that low was into our pitchfork band of support. The last time we came down to that pitchfork band of support, we got a 50% move to the upside. We bounced from the pitchfork band of support. We came up and made new all-time highs. We got a 69% move to the upside. Now we were expecting at least some sort of bounce from this area at the bottom of the pitchfork band. Also, because the total market cap was at the bottom of its pitchfork, we were expecting some sort of bounce in the crypto market. But if we go back to this pitchfork band, I said it was highly likely that this is going to make a lower high before coming down and making a lower low, and that it's likely that we form a range within and around the pitchfork band. We have done that. I've talked about that for about a month now, guys. Now, we're dumping, and for the first time, we're losing the value area low of the range. The first time in the last couple of weeks here. If we go back, let me just go to the 2-hour chart, and we pull the volume profile of this corrective range that we're seeing from 80.5K onwards to present day, we are losing the value area low of the range. And if we close the daily candle below it, the next big support level coming up is that liquidity around $83,800. On Bybit, it's just a little bit lower. I think it's 83,755. But if we pull that 786 Fibonacci, you can see that that 786 Fibonacci, let me fix that, there we go, is going to be in confluence with that level at $83,500. So looking between $83,800 and $83,500. On Coinbase, it's closer to $83,600. But that is the support level below us that we could see a small bounce from. Overall, though, guys, I expect us to continue the bearish momentum to the downside. And that's about it for Bitcoin. I mean, like, we are just ranging within our pitchfork band like we were expecting, like I was expecting over the past month. But overall, as this range was forming and everyone was getting bullish to say new all-time highs are coming, I was warning, guys, this is likely to be a corrective move before continuing the downtrend. And I still do believe that this is a corrective move, and this could even turn into a larger corrective move, you know, some sort of W, X, and then we get a Y wave to the upside, a three-wave complex correction before continuing to come down to take out 80.5K lows. But because we did see the rejection from our Fibonacci channel, a multi-test rejection from our Fibonacci channel in this area over the past month, to me, it has almost been confirmed that we are going to come down to take out the 80.5K lows. It's just a matter of time, and now it's a matter of playing the trend. Scalp longing support levels and shorting resistance levels, where we could then look to continue the bearish trend that we've been seeing for the past couple of weeks and continue to more macro support levels, at least taking out 80.5K. All right, before we move on, I'm just going to check this triangle real quick. I want to see what Bitcoin is doing here. Yeah, so starting to, we're just chopping within the triangle. I expect that we are going to continue to push down here. That's about it for Bitcoin. I do want to go quickly into the altcoins and the total market cap. But before I do, I want to talk about the partners of the channel. The main partner of the channel is going to be BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my link in the description below, my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees. You can earn up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100 into the exchange, you can get a 50% deposit bonus, which is the highest bonus that I've seen of any exchange out there. They're also offering various 20% and 10% deposit bonuses if you deposit some of the larger amounts. And I have also partnered with BYDFI to create a Telegram community. This Telegram community is free. All you need to do, it's a private community, and all you need to do to get in is sign up with BYDFI using my affiliate link and deposit at least $100 into the exchange. Now, I do post my analysis throughout the day. Like today, I was giving you guys updates on the bearish CVD divergence. We're likely to dump down and take the lows. I was giving you updates, really no SFP at 85.1. So I give updates throughout the day. I'll give trade setups in there, and you guys can pop in the general chat, tag me, and ask me questions on altcoins, ask me questions on other, just market analysis in general. If you're interested in joining that Telegram, all you have to do is after you deposit $100 into BYDFI, click the Telegram link in the description of this video. And then once you're in that Telegram channel, type in /verify and your user ID for BYDFI, which will be right up in this, right here. It's probably going to be a string of letters and numbers for you. But once you do that, you'll automatically be put into the private Telegram community where you will then have access to my thoughts on the market. You have access to ask me questions. And once you are in, you are in. The $100 is your money to trade with. It's not like you're giving it to BYDFI. You're just using the exchange to trade. And you can also get the 20% discount on trading fees. And you can earn the 50% deposit bonus if you do KYC there. Okay. The next partner of the channel is, also, before I go on, BYDFI is doing a trading competition here as well with Divine Hood. We are doing a trading competition where you can earn, actually, this is the old one. I'm sorry. This is the old trading competition. We're doing a trading competition where you can get some new prizes. They're giving away a laptop, a monitor, a chair, and a $10,000 gaming rig. Really, really cool prizes you can earn in that trading. So let me go ahead and show you guys that real quick. I'll put the link in the description of this video, but this competition is going on for about five and a half more days, and it's volume based. So depending on how much volume you trade in the competition, you can win a pair of headphones, you can win a gaming chair, you can win a monitor, a really good Razer monitor. You can earn a laptop, and then the grand prize is this ultimate gaming or desktop rig, a $10,000 value. And so if you're already trading on the exchange, it is free to sign up for the competition, and all that trading volume will go towards a potential goal of you winning one of these prizes. So if you're interested in signing up for the competition, if you're already trading on the exchange anyways, in my opinion, might as well sign up, and maybe you could win one of these prizes. The link is in the description. It's going for 5 more days. All right. Next partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator down here. I use it for all my trade confirmations. As we're coming down to support, I want to see bull divs on the chart. I want to see the way money flow looks on the chart. And for me, it's an invaluable tool to help me enter and exit trades. It also gives me a bias on overall direction for the day. If we're seeing bear divs, I think the trend is going to continue. Or if NAMI is printing hidden bear divs, which, by the way, guys, earlier today on the 15-minute chart, I did post in the Telegram as we were coming up and making these lower highs after bouncing. This was a couple hours ago. I said, guys, NAMI's printing hidden bearish divs on the 15-minute. it's likely that this trend for the day, this downtrend for the day of lower lows, lower highs, lower lows, lower highs, lower lows, is likely to continue. And we are going to continue down to our actual real support below us at 83,600. And so NAMI is really an invaluable tool. If you're interested in purchasing NAMI, the link for the website is in the description of this video, and they have partnered with the channel to give you guys 50% off a lifetime membership to NAMI. So Divine50 is the discount code. You can use that. If you use my affiliate link and that promo code in the promotion box, you can get 50% off. If you're interested in signing up, both link and discount code are in the description below. Lastly, we do have MEXC and Bybit, both great exchanges, both offering some trading discounts on trading fees and some futures trading bonuses. Bybit's offering up to $30,000 depending on how much you trade on Bybit, the larger amounts of volume. So if you're interested in helping out the channel, signing up with one of my affiliate link to one of those exchanges is also much appreciated. Okay, that is it for the partners of the channel. Let's go ahead and move on to the total market cap. I covered this a little bit yesterday in the live stream, but we are coming down to the bottom of our pitchfork. So let me zoom out to the daily first. And I was telling you guys, when we hit the bottom of the pitchfork, I was expecting at least some sort of bounce, to create a three-wave corrective move. We have come up to back test after bouncing from the bottom of the pitchfork 2 times, actually. Here we wick past a little bit. Here we tested it to the dollar on a higher low. We have come up to actually back test the value area low of our macro range. This is all of 2025's price action. We are rejecting on the bearish back test of the value area high of 2025's price action. And now we are looking like we are going to break the pitchfork to the downside. So for me, it's likely that the downtrend on not only Bitcoin, but the total market cap is going to continue to bleed. We are going to continue to bleed out money on the total market cap. And if we start to close daily candles, which today was our first daily candle close, you can see here at 80.5K in late November, we wicked past it, but it was no daily candle close below it. Back on December 1st, we came down, we touched it to the dollar, but no daily candle close below it. Today is our first real sign of weakness where we have dropped below it. You can see even on the daily candle, we opened the daily candle below it, or opened the daily candle pretty much right at support. We rose up to try to get back inside the pitchfork. We couldn't. We closed the daily candle below that pitchfork support level. This is our very first sign of weakness on higher time frames, that the total market cap is about to lose this support level that's been holding for the past month. And you can see we just opened a fresh daily candle, and it looks like it's continuing red to the downside. Money flow looks like it's about to roll out again on Market Cipher B. And remember, in order to confirm those bull divs on the daily that I talked about in yesterday's live stream, we need a lower low below this low from November 21st at 2.73 trillion in order to get confirmed bull divs. So if we come down to the 786 at 2.63 trillion, we could see lower lows in the price action, and we could see higher lows in the momentum waves. That is what we would want to see for a bigger bounce to the upside. We could look for the bounce from the 786 all the way to back test bearishly that pitchfork before potentially breaking down again. So total market cap is showing a sign of weakness by closing the daily candle below our pitchfork support that it's kind of been holding for the past month. And I think the bearish downtrend is going to continue, is what I'm trying to say here. Okay, that is about it for the total market cap. Let's go ahead and move on to Ethereum. Give me just 1 second, guys. I got to get a drink of water here. Okay, for Ethereum. On Ethereum, we are seeing the ascending channel break to the downside. And let's zoom into the hourly chart here. On the hourly chart, we were looking, first off, we bounced. Let me hide this channel for a second, and I will zoom out. We'll back up here. I'll zoom out. We were bouncing from a very key pitchfork midline, and we had this support marked out ahead of time. We talked about how this was likely to give us at least some sort of corrective move to the upside, and we did. We wicked through it, got above it, made a lower high, but that was a good day trade long position from that initial support level. Then we came back down and back tested the pitchfork midline to the dollar, just like the total market cap back tested the bottom of the pitchfork to the dollar. And then we saw another move up to back test our key anchored VWAP. Guys, this anchored VWAP was our $1,400 anchored VWAP. So it's anchored from the $1,400 lows. And the thing with an anchored VWAP is when it's a trend, right? It's measuring your trend based off volume. So when you're above it, it will often act as support. You come down to it. If you hold it as support, you can expect the bullish trend to continue. And we did when we tested it and held it bullishly. But when you lose it and you start to close candles below it, if you bounce from a support level below it and then you come up, this is called a bearish backtest. And when you bearishly backtest that, now you're trying to confirm, the market is trying to confirm whether, yes, market sentiment is flipped bearish and bearish trend is going to continue and we're going to continue to make new lows. Or if you can reclaim it, then okay, that was a fake out based off fear and the overall trend of bullish momentum might continue here. But because we came up to $3,300 area, we rejected that $3,300 area, which was also a value area low. If we pull this range that goes back to March of 2024, this upper price action, excuse me, not that range. Let's see. It was a different range we were looking at. Was it this upper range in here? All right. Well, there was a value area low there. That might have been the 4-year long range, actually. 4-year long range value area low. We did reject from that range value area low, and we are dumping. But here's the thing, guys. Upon the bearish backtest, if you come up on a bearish backtest and you reject, then it's highly likely that you make new lows below the initial low, which in this case was the low on November 21st at $2,600.20, $2,620. So, and you see now Ethereum is starting to dump for the past couple of weeks here. We've been dumping and we are coming down to test that pitchfork midline again. Now, I will say this. Let's say that Ethereum is going to come up because this $3,600 level between $3,600 and $3,700 is our most key resistance on the chart right now. $3,600, it's going to be the value area low of a 4-year long range on Coinbase. That's right. This value area low was the Bybit value area low. If we go to Bybit and we look at the 4-year long range value area low, it was right around $3,300 if we zoom out. Zoom in, excuse me. But if we go back to Coinbase, the 4-year long macro range at $3,600, value area low is at $3,600. Let me turn on that 4-year long range. You can see that it's coming in right around $3,600, $3,587, let's say. But around $3,600, we have some very key liquidity sitting up there. We have the back test of our pitchfork upper band. We have a macro golden pocket pulled from the last big, the wave 3 highs to the wave 3 lows. And we have, 4-year long value area high, golden pocket, pitchfork, and liquidity. So that is going to be our most key resistance. Now, our support is still this pitchfork midline, but let's just say this. Once again, going into that 3-tap theory, just like we saw with Bitcoin on the Fibonacci channel, on the bearish backtest, 3 taps, 1, 2, 3, you couldn't get back inside, you reject. Now, with Ethereum, we could be looking at this as support, 1 tap here, 2 tap here. If we come down for a 3rd tap and hold it, then we might be able to get that move up to $3,600 to backtest this macro resistance. If we do not hold it on the 3rd tap or break through it and bearishly backtest it, which I think is more probable, then we are going to continue down, most likely to our macro logarithmic golden pocket around 2250 to 2150. And I also said about a month ago that it was likely we were going to form a range in this area around your pitchfork midline. We're probably going to lose that range, bounce from a support level before the golden pocket, come up to backtest that pitchfork midline before ultimately working your way down to the golden pocket where it will be in close confluence time-wise with your pitchfork lower band. So that could be not until about February to March, but I do think that it's likely that we do continue down to 2250 to test that macro golden pocket in confluence with our pitchfork lower band. First order of business, though, we just trade this little range that has been forming around our pitchfork midline. So we can zoom in here on the 4-hour chart. We can pull a volume profile here. And I'm going to pull a volume profile. I'm going to include this little bit of price action in here because you can see we're kind of forming a sideways range. This was acting as support. Then it got flipped to resistance. So you can see we have a sideways range below that support resistance flip. Support, resistance, sideways range. And if we pull the volume profile of that sideways range, you can see that we're even losing the value area low of the range today, closing our first daily candle below the value area low first time since we've rejected from 3,300 on the bearish backtest of that anchored VWAP. And really, to me, the next level that we're going to come down to, very similar to Bitcoin, we have key liquidity resting down at 27.16. And that is going to be right around your pitchfork midline. If we pull our Fibonacci from the lows at 26.20 to the highs that we made, actually, we're coming down to our 786 right now. Okay, this is interesting. It was the 886 that was, our 886 is right on top of that liquidity grab. So let me change that to yellow so you guys can see that. And oftentimes, guys, the 886 in sideways ranges, and this is a very clear sideways range here that is forming on Ethereum, very clear sideways range. The 886 will give you some sort of bounce. So if we do that liquidity grab into the 886 and then reclaim the pitchfork midline, I will look for a long upon that successful SFP because it is still our support level until broken. A third tap of it, it's getting weaker and weaker every time. So we really need to watch for a break of it this time. But 886 at 27.17, our liquidity at 27.17, that would be the next big level I'm looking at. As far as our 786 goes, guys, we are chopping around the 786 right now, around 2,800. But be careful because we already wicked it on Wednesday yesterday, and that we got a nice bounce from the 786 yesterday, but we made a lower high, and now we're coming down and trying to break through it. So when you initially test it on the first test, you expect some sort of bounce from it. It is a Fibonacci retracement level. But we made the lower high, and now we're breaking down, and that bearish engulfing candle, not only on Bitcoin, on all coins in the market, you can see this big bearish engulfing candle that we saw here. And we're continuing the downtrend. To me, it's more likely that this, I guess you call it descending channel. Let's pull this descending channel here. You can see we have a very clear, nice descending channel that we've been trading in since December 10th. So about 2 weeks now, we've been trading down in this descending channel. And I do think the continuation of this descending channel is I think we're going to continue grinding down within this descending channel until we actually get that liquidity grab. We're also below the value area low of our range. You can see we're value area low of the range is at 2,870. And until we can reclaim the value area low, we have to say it's a higher probability that we come take the liquidity below us at 27.16. So I am expecting this to continue down. Now, if we could get a bounce, first off, Bitcoin is showing some nice 1-hour bull divs on the chart. Ethereum is not. You can see we have lower lows here, but we also have lower lows on the momentum waves and even on NAMI locally. No bullish divergence. And NAMI is quicker to confirm divergences than Market Cipher B, but we don't see any bullish divergences on the 1 hour. If we zoom out to the 4-hour chart, on the 4-hour chart, you can see no bull divs either. No bull divs either. Money flow still draining out on the 4-hour. And NAMI, yes, it is starting to curve to the upside, but we did get that red dot today on the lower high that we made today. So for me, everything looks bearish. We're not really seeing any bullish confirmation to look for long from this 786 that we're at right now at 2,800. So I am expecting lower on the charts. The liquidity grab at 27.16. If we get the confirmed swing failure pattern, I will look for a long because it's also our 886 Fibonacci that highly bounces in sideways ranges. Other than that, guys, I'm not looking for any other long position. The only other long position I would look for is maybe a liquidity grab of our 2620 lows. But that would also be losing our pitchfork midline, and we would have to be careful if we came down, grab liquidity of 2620. we might just push back up to bearishly backtest that pitchfork midline before continuing to dump. We'll get to that when that happens. By the way, guys, tomorrow I am going to stream at 9 a.m. Eastern Standard Time, so a few hours before my normal streaming time. I'm going to stream tomorrow morning right around New York Open. So please come join me for the stream tomorrow. We can cover all the price action live. We can look for the trades. Yesterday, we were able to get some really nice trades. We got the swing failure pattern on Solana. We got a trade on Turbo. So please come join, and you guys can ask questions. You can ask to look at we can look at some coins in the live stream. Other than that, guys, that is about it for Ethereum. I mean, we do have some naked daily points controls. Let me go ahead and turn this on. Okay, and let me zoom in here. Okay, looks like we just took out our naked daily point of control from the close 50 minutes ago. And let's look at our naked weekly point of control here from last week. That naked weekly point of control, yeah, I guess that was where we rejected on Monday, or on Wednesday, excuse me. No. I'm getting all mixed up here. Yeah, no naked weekly points of control within this downtrend that we've been seeing in the past couple of weeks. So I would say the downtrend's likely to continue here, guys. All right, moving on to Solana. So yesterday on Solana, we were looking at, first of all, on the higher time frames, we're looking at the range, the sideways range that has been forming for about a month now between the POC. This is almost a 2-year long range. This volume profile goes back to March of 2024. This whole entire upper price action here after the bigger impulse ended from $46 to new all-time highs. But this sideways range here, or this volume profile here, we are ranging between the point of control of our macro range and the value area low of our macro range. And we're ranging in and around the pitchfork lower band, which I talk about how these ranges form within these upper and lower bands often. We did reject 3 times from the POC of the range. Second one was a liquidity grab, and this could be seen as some sort of distribution up here, or redistribution, because we already dumped. So we dumped. This could have been accumulation or redistribution. Accumulation, you're going to break it to the upside. Redistribution, you're going to break the range to the downside and continue pushing lower. I was actually looking at, because we were building up some liquidity, if any of you guys watched yesterday's stream, we talked about this. On this range that we've been seeing for the past month, we had our low at 121.5. We had a higher low, and then we had some higher lows in here. So I was looking to come down to take out the liquidity of our 121.5K low and get a swing failure pattern. Upon the confirmed swing failure pattern, look for a long. Well, yesterday during the live stream, we had that play out, and I took a long live in the real time with you guys. Not you. You know, I don't give financial advice. I just show you guys my trade setups, what I'm looking at, and you guys can choose to take that trade as well, but it's not financial advice. I'm not telling you guys to do anything. I'm just showing you the levels that I'm looking at. We got the confirmed swing failure pattern, but look at what happened here. We pushed up. We back tested that value area low, which I did warn about. Whoa, what's going on here? Okay, we back tested that value area low, which I did talk about. We came down, made a higher low, and then we pushed up through the value area low. Saw a 3-wave corrective move, and if we pull our Fibonacci from Wednesday's highs to the lows that we made on Wednesday, we turn on that golden pocket. We front ran the golden pocket just barely, but we pretty much came up to that golden pocket, lower high resistance. This was still a nice scalp trade, guys. If you took a swing failure pattern long here, remember I said yesterday, because we are looking at this you're below your value area low, that would have to be at least a TP1, or when you break that value area low, you could choose to take a TP and move your stop loss to break even. I did that personally, and I took out only 10% TP because I was expecting this could have been a swing long opportunity pushing up much, much higher. But we did start to reject, and once we lost the value area low, I closed out my short or my long position completely. And We are now dumping down and losing the value area low of our macro range. We are also not seeing the swing, a swing failure pattern of yesterday's low. We are coming down to some key support. So you guys can see I have a couple levels on the chart here. First off, I have our 1.618 Fibonacci extinction. Let me zoom out to the 8-hour chart. 1.618 Fibonacci extinction down in this area. If we're looking at that rejection from the POC, and we're looking at this was a 3-wave corrective move. You can see very clear 3-wave corrective move in here. After a 3-wave corrective move ends, you could continue the impulsive price action to the downside. This has all been impulsive price action to the downside. So this could have been a wave 1, a wave 2, and we could be in a wave 3 right now. And our wave 3 target is around the 1.618, but just below that 1.618, we do have the bottom of our pitchfork in confluence with a fresh daily level. So the next long I'm going to be looking at really is around 112.75. And that would satisfy a 1, 2, 3. We could get a small bounce, but remember, this bounce is going to be to make a lower high before making another lower low and finishing a 5-wave impulse to the downside locally in the past couple of weeks. So I will look for a scalp long from around 112.75, but my first TP will be the bearish backtest of the value area low. Oops, let me pull the wrong thing there. What was I just looking at there? Long position around this area. Stop would go below that support level, and I would be looking at the first TP around the value area low. That's still a 5 to almost a 6-to-1 risk to reward ratio trade for a TP1. If we could reclaim the value area low, then I do think we might even be able to make our way up. We'll look at those targets when it happens, but we would look at our golden pocket from the range highs to the new lows. But because we are now, our Elliott wave count is expecting a 5-wave impulse to downside, wave 1, wave 2, wave 3. We can also pull our Fibonacci from the highs of wave 3 to the lows. And this is theoretical fib, but I'm going to put it right on that daily level. And we're going to look between the 382 and the 0.5 Fibonacci. Well, you can see your 382 Fibonacci is going to pretty much be the backtest of the value area low. So our wave 4 corrective move could just be to come up to $125 before rejecting and coming down and making a 5th wave to the downside. So I'm looking to potentially long around 112.75 to take at least 50% profit at 125. And I'll also look at 125 to potentially open a head short as well. So no matter what, I could be long from here, short from here. I'm protected either way. You move your stop loss after TP1 to break even. And then you could look for one will get stopped out, one will stay open, but you'll be profitable either way. So that is what I'm looking for on Solana. Yeah, we are the bottom of the pitchfork. If the bottom of the pitchfork doesn't hold and our daily level doesn't hold, this pitchfork has been a very key pitchfork as well. And I do think that if that bottom of the pitchfork doesn't hold, you can see we did reject from the top of the pitchfork after hitting into our macro 786 Fibonacci. And there was also a weekly level up here at 252.5. I talked about this resistance, by the way, before we rejected from it. I told you guys to look for shorts up here because we were at the top of a pitchfork. And we've worked our way down through the anchored VWAPs, through the pitchfork levels. You can see anchored VWAP was acting as big support here. We actually longed this, and we shorted the bearish backtest of the upper band. We lost the pitchfork midline. We shorted the backtest of the pitchfork midline. And we did take a long on this second test of the value area low. But also, we took a short in this purple box live during a stream a few weeks ago as well, if you guys remember that. So Solana is working its way from the top of the pitchfork to the bottom. If the bottom of the pitchfork doesn't hold, I do think Solana could come down to take out its $96 lows and potentially even continue much, much further down. We are potentially developing some bull divs on the daily time frame, not confirmed yet, but we have lower lows on the price action. We have higher lows on the momentum waves. Now, on NAMI, locally, we do not have bull divs anymore. They have been invalidated. So we really just need 112 to 113 to hold, guys. If it doesn't hold, we could be in some serious trouble here. But that's about it for Solana. Let's go ahead and go quickly on to SUI. SUI is still at the bottom of the, and we're at the 886 Fibonacci. You can see that 886 Fibonacci's in here. And we're at the bottom of the pitchfork again. And guys, I said this, gosh, back in November, we were bouncing from the bottom of the pitchfork. I said, watch the back test of the band now, the bearish back test. And look at what happened. We bounced from the bottom of the pitchfork, 3-wave corrective move, which, by the way, you had a liquidity grab on this low. And we talked about that liquidity grab beforehand. If we look at this, you can see that low. We had a liquidity grab of the low, and then we pushed all the way up to the top of the lower band, where we were expecting a rejection from here ahead of time. We got that rejection ahead of time. So once again, the levels are playing out. The technicals are playing out really nicely. The band was acting as support, but then once you lose it, now it's going to act as resistance. And sure enough, we got that. This was a 3-wave corrective move to bearishly backtest your pitchfork band. We rejected, and now we could be in a 5-wave, another 1, 2, 3, 4, 5-wave impulse to come down to our key level of support that I've been talking about for a while now, which is, let me go ahead and turn on that trend-based Fibonacci extinction. Between, overall, we're looking at a bounce around 109. 109 is going to be a really big support level for us. But if we look at our larger trend here, or our larger range, let me go ahead and delete this. We're looking at a potential sideways kind of flat correction. All this pushed down is a wave A, 3-wave corrective move and a B, and then another impulse to the downside and a wave C. And within this C wave impulse to the downside, we have our 1-2s up in here. We have, you know, a 1-2, 1-2, 1-2. So a multiple 1-2 impulse. All of this was your third wave. This was our fourth wave correction. Now we need some 4 5s, 4 5s, 4 5s to come in here to finish all these 1-2s and then all these 4 5s. So coming down to our macro logarithmic golden pocket, pulled from your lows of 46 cents to your highs at $5.37. That macro golden pocket is coming in between 117 and 109, let's say. But if we pull our trend-based Fibonacci extinction from, let me get rid of this real quick, from the highs of your A wave to the lows of your A wave to the highs of your B wave, your trend-based Fibonacci extinction, your most common targets for an ABC correction are between the 1-to-1 and the 1.236. I showed you guys this a few weeks ago as we were coming down here. Actually, in November, I think it was November 21st or 22nd, that I made a video showing you guys that the two main levels to watch was the 1-to-1 Fibonacci at the bottom of the pitchfork. And then if we lose the pitchfork, the next big level is our daily order block, our 0.65 macro log golden pocket, and our 1.236 Fibonacci extinction around 118 to 109. So that is where we're looking. Actually, not 118 to 109 is the golden pocket, but really 109 is your kind of sniper area. Your 1.236, you can see, is at 109, and also your 0.65 golden pocket's at 109, and your daily order block is right around 109. So we could be getting some choppy, and these are daily waves that are playing out. So for the next couple of months, we could get some chop and some 4 5s until we get down to 109, where I'll be looking for potential swing long opportunities, because it would finish our overall A, B, C, and then we could start to blast off again. But that's it for Say. So locally on Say, we are at the bottom of the pitchfork again. Let's zoom in onto the hourly. We are at the bottom of the pitchfork, but we're losing the bottom of the pitchfork. Let me hide this trend-based Fibonacci extinction real quickly. And we're losing the bottom of the pitchfork. You can see here. And we might continue down to take the liquidity again. We might see another liquidity grab again in this sideways range at 130. If we don't take that liquidity, I think we're going to drop to 118, where our 0.65 golden pocket, or 0.618 golden pocket is. Money flow looks pretty bearish here on the 1 hour chart, but we are developing some bull divs, lower lows, higher lows, but that bearish money flow is keeping me out from getting into a long right now. So I would be looking for a confirmed swing failure pattern of 130. If we pull our sideways range and look at this sideways range, You can see we rejected today after losing. First of all, after on Wednesday, we rejected from the POC and we lost the value area low of the range. Today, we came up, back tested the value area low of the range. We rejected. Now we're dumping. So once again, SUI is in bearish mode. We have rejected the bearish backtest of our value area low of the last month of price action. And I expect the downtrend to continue now because of this bearish rejection on the bearish backtest of the value area low. It is highly likely that we take out our range lows now. We come for the liquidity of the range lows. Okay, that's it for SUI. Let's go on to Say. Say here, guys, is losing our pitchfork band of support. About a month ago, we came down. We hit the bottom of the pitchfork band, pretty much to the dollar. I talked about that when the day it happened. And we formed a sideways range. Let me get rid of this real quick. We formed a sideways range in and around your pitchfork band. I say this a lot on these pitchfork bands. Ranges in and around the bands. But after coming up and taking out your range high liquidity, you can see we had this kind of like left shoulder, head, right shoulder, inverse head and shoulders. A lot of people are going to be looking for a breakout way higher, but you just came up, you took out the highs of the liquidity at the highs of the range, and then you dump right back down. You also had some fair value gaps in there. So we took out some fair value gaps, imbalances. We took out the liquidity from the highs, and now we're starting to dump, and we're losing our pitchfork band of support. Very bad. And you can see a few days ago, even on the daily time frame, we had that one green daily candle where it tried to bounce, it failed, and now we're breaking through it and seeing bearish continuation in the dump past the pitchfork lower band. So I expect that we could dump all the way back down to the bottom of the pitchfork around 87, 87, 8, all the way to 86 cents. Let's zoom out onto the 3-day chart. Yeah, and we might even be coming for the lows. Let's throw these lows on the chart. 94.8. We have some key lows at 94.8 on Coinbase. I think we're at least going to come grab the liquidity of those key lows. Yeah, and we could be seeing a bearish 1, 2, 3, 4, 5. And look at this. This 3-wave corrective move in a 4. 1, 2, 3. A 3-wave corrective move in a 4. So we could be looking to finish an overall 1, 2, 3, 4, 5-wave impulse to the downside, where I would be looking for it to end around the bottom of the pitchfork, around 87 cents, where we could then look to see if we have bull divs confirmed on high time frames to look for a swing long opportunity. But Say is looking very bearish here, guys. Very, very bearish. Zooming into the 4-hour chart. I mean, just downtrend continuation. Money flow looks bad. Really bearish here. Hidden bear div printed after we lost the lower band today. And we are just continuing to dump. So first level I would even be interested in along is the swing failure pattern of 0.948. Next level is 87 cents. As far as longs go, I'm not looking for any, or as far as shorts go, it's too late to take a short now. If you would have shorted the highs here after you broke those highs, if you would have fell back underneath them, you could have opened a short. So you break above them, you fall back underneath them, you can open a short here. Or upon the bearish back test of the pitchfork band, when you started losing it in here, you could have shorted, left some of that open. But if you're not in a short on Say, I wouldn't be opening shorts now, even if we think it's going lower. It's bad risk management to open shorts now. So if we do see a bounce before we get down to 0.948, maybe we see a bounce here, I would be looking for a short on the back test of the band. Around 11.6 to 11.7. That's about it, though. All right, that's it for Say. Let's move on to XRP. Okay, guys, on XRP, first of all, that trade already played out. We got a scalp long from that. We're losing our 786 Fibonacci. And we've been looking at on XRP this sideways range after the November 10th dump, because it dumped so aggressively, so much more than other coins on Coinbase. we were looking at this sideways range that was forming, and you could see, sideways range. But now, over the past couple of weeks, we've kind of been in this descending channel here. That's a horrible channel, but we've been looking at this descending channel. Let me go ahead and throw that on the chart. That's our bigger channel. So we're in a bigger descending channel from the all-time high. Potentially, we could come all the way down to the bottom of the channel around 150. But if we look at our smaller channel that we've been in, this is our smaller channel that we've been following for the past month or so. This descending price action, we are now losing the lows of the channel, which is very bearish. And usually descending channels have a higher probability to break to the upside. We're breaking the channel to the downside, and you can see today was really our first daily candle close and open below the channel. Yesterday, we tried, so on Wednesday, we bounced from the bottom of the channel. We got to move up to the midline. We rejected the midline. Big bearish engulfing candle, which was today, but as far as market close, it was yesterday. We're an hour and 10 minutes into the new market. But you can see here, let's zoom in onto the hourly chart. We back tested after losing the channel support. We rejected from the midline today, bounced from the bottom, rejected the midline, lost the channel, bearishly back tested it locally just a few hours ago, and now we're continuing down. So to me, it is bearish, and it's likely that we do continue to dump to the downside. We do have the liquidity of the Coinbase crash lows coming up. Almost all other coins have taken out the liquidity from their October 10th lows. XRP has not yet. And at 177, we do have that liquidity grab, potentially. You can see we potentially have some bull divs on the daily time frame, but your money, or on the 8-hour, but your money flow is still bearish here. So the only way I would look for a long is if we confirm the swing failure pattern. So pierce below the level and then reclaim it. And then I would look for the long. Other than that, I'm not looking for anything else because there's not really much else in here until we get down to 161. Unfortunately, XRP looks bearish here. Money flow on the daily time frame is leaving aggressively, and we did print a hidden bear div about a week ago, last Tuesday. So the downtrend's likely to continue, at least until we take out the liquidity from the crash lows. And I just think the whole market is bearish, guys. We're about to lose the total market cap pitchfork. And if we lose that total market cap pitchfork, which we're starting to lose, we could see a much bigger dump in the total market cap, which means the altcoins are going to bleed severely, and even Bitcoin will bleed. Everything looks bearish to me here, guys. Everything does. So we have our smaller channel. We're breaking out of that. If we turn on our bigger channel, our bigger trend channel, which is this descending channel, the bottom of the channel is where I think we might end the entire dump. If total market cap really starts to dump, we could see, some liquidity grabs, but we could end, in the 150 to 140 area. And that will take some time to get down there, but that's what potentially I'll be looking for swing long opportunities around that area. Other than that, we have our sideways range. You can pull the volume profile of your sideways range. We're losing the value area low. And actually, was it on Wednesday, we bearishly backtested that value area low and we rejected it, confirming that the market is no longer pricing the fair value of XRP between 198 and 276. Now the market is saying, whoa, what used to be considered undervalued this entire year for XRP is now not good enough. We want lower prices. This honestly looks like bear market stuff to me, guys. This is kind of crazy what's happening with the market, but we just have to go with what the technicals are showing us, and the technicals are showing us that we have more downside to come. So if we turn off the volume profiles and we look more locally at this dump down, since we had our October 10th lows, we had our 3-wave corrective move and a dead cat bounce, and from this high around 269, we could be looking at a wave 1, wave 2, wave 3, wave 4, wave 5. And I would look for that wave 5 to end at taking out the liquidity at 177. Now, after that 5-wave impulse ends at one, if it does end with a liquidity grab of 177, 1, 2, 3, 4, 5, we might be able to see a 3-wave corrective move all the way up to our golden pocket. So we can now repull this golden pocket's no longer valid. We can repull it. And right now, which it's going to change every second because we're dumping as we speak. And let's just pull it right to below the liquidity. Yeah, and coming up to around 234, we might be able to come up to 234 to 237 after taking the liquidity. But let's see how that plays out. Right now, everything's looking bearish. We're dumping. We're dumping as we speak pretty hard here on XRP. And we're coming up to that liquidity grab. Actually, I'm going to set an alert right now on this liquidity grab. If we get the confirmed SFP, we do have some nice bull divs on the chart here. Lower lows in the price action, higher lows in the momentum waves, and your money flow is rising to the upside. You can also see bull divs regionally here and local bull divs on NAMI. So let's look for that liquidity grab of 177. If we get it, we can look for long. That's it for XRP. Lastly, let's go on to Chainlink. Chainlink here is dumping. Chainlink's been a bit of a letdown here because we have our bottoming range here that we've been in for about a month, our sideways range that we've been in for about a month here. And once again, just like Solana, we made our initial lows and we made a higher low just below that initial low. So we have a liquidity trail. So for me, and also we did front run the value area low of our range. You guys remember, if you go back about a month ago, I was talking about this. Zooming out to the daily chart here, this range goes back 2 years. You can see November of 2023, so it's a 2-year long range, this upper range in here. And when we came down initially, so let me pull this volume profile back. When we came down initially and made that low on Friday, November 21st, you can see the value area low of the range was exactly at 1150, but we stopped at 1160, let's say 11,596, so $11.60. We had front run the value area low of the range. And because we did that, I said, guys, we might dump back down to actually hit that value area low. So now we have the liquidity grab of 1160 into the value area low of our 2-year long range. And also, I did say this a month ago, at the bottom of these macro ranges, it's likely that you form a sideways range here. It's not like you're going to come down, tap the value area low, and see a V-shaped recovery. That's generally not how the market works. The market will dump. You'll start to form an accumulation range in here while whales are buying near the bottom, and then it will either expand to the upside or redistribute to the downside. So we are still just ranging, very similar to Solana, between the point of control of your 2-year long range and the value area low of your 2-year long range. What I'm looking for here on Chainlink, let me go ahead and delete this here. What I'm looking here on Chainlink locally is the SFP 1160 into the value area low. If we get that, then I will take the long position. If we start to lose and close daily candles below 1150, I'm ultimately looking for us to come down to $10 here, where we have a double liquidity grab into your macro logarithmic golden pocket. And I've talked about this many times on the channel, but that's almost a spot buy opportunity for me. Zooming out onto the weekly chart. Earlier this year, in April, you can see in April, we had a multi-month dump to the downside from January to April, this big dump here. And if we pull our golden pocket, a logarithmic golden pocket, because this is more than a 100% move to the upside, from the bear market lows to the cycle highs at $31, let's say, the golden pocket, macro logarithmic golden pocket is coming in at 993 or 992 to 935. Well, in April, we came down there. We had front run it just by pennies, just by dollars, pennies actually, you know. And we also had some very key liquidity from this imbalance candle. You can see all these kind of 1-2s in here. You got your big push up after that. All these liquidity resting below this big imbalance candle, which there would be stops below that. Anyone that longed in this general area is putting their stops below that low. And we have that liquidity in that area. that was front run in April. And then we created some liquidity of April, a double liquidity grab at around $10, $10.10 to $10.06. So if we lose and start to close daily candles below this value area low at 1150, now it's at 1170, let's say, then I do think we're going to come down and grab the liquidity from April's low and from the low in November of 2024 into our macro golden pocket, where that is where I will be looking for swing long opportunities and also potentially spot buys. Grab all that. Maybe we can make a push up, at least up to back test the pitchfork. But that's about it for Chainlink. As far as local price action goes, I'm only looking for the SFP of the low at 1159. If we don't get that, then I just let it keep dropping until we form some sign of strength. We are trending within a descending channel here, just like a lot of these coins, this kind of descending channel that we're seeing. Let me re-pull this. You can see our descending channel, trending within that descending channel. And we're at the bottom of the channel now, but we have not grabbed the liquidity. And since we're so close to the liquidity, I would wait for the liquidity grab before actually trying to long this thing. You do see local bull divs here on the 2-hour chart. So a liquidity grab would confirm a long position for me. Actually, let's set an alert here right now for an SFP long. Okay, guys, but that's it for today's video. Please like the video. Please subscribe to the channel. I'll be live tomorrow, 9 a.m. Eastern Standard Time. Come join me. We'll cover all the price action live, the market live. Have a good one.